want to know the difference between a pre-qualification and a pre-approval.
Oh, Ben, that's a really good one. Guys, when you receive a pre-qualification from your bank or a lender, basically they're giving you that because they haven't reviewed all of your documents. They are just going off of what is on your loan application. On a pre-approval, which I only do pre-approvals, your lender is going to have you fill out the loan application and they're going to be requesting your documents to verify that what you've put on the application is true and correct. So making sure that your pay stubs match the income listed on your application.
So, in general, a pre-approval is much stronger than a pre-qualification when you're going to buy a home.
Yes, 100%. I would never go and tour homes without a pre-approval. Your loan is just not guaranteed at that point, so you don't really have the certainty to shop yet.
Awesome. And what types of things would I need to bring as a buyer, potential buyer to you, my lender, to get a pre-approval?
So, in order to get a pre-approval, we want to, the most important thing is to confirm your income. So, we will be asking you for W-2s, pay stubs, and then I'll also be looking at your credit report and your bank statements to make sure that you have enough funds to actually close on the loan.
And tell me a little bit about credit scores and how that may impact me getting a mortgage.
Okay. Credit is really important. It's going to tell the lender about your willingness to pay the loan. So it will really impact your mortgage.
Mhm. And as a someone with maybe new credit, is there certain credit standards or credit scores that I should have before buying a home?
I would say the best interest rates start at a 700 credit score. Now, there are a lot of programs that actually will still give you a great rate as a first time homebuyer, even if you don't have that 700 credit score. So I would say don't hold back because you're not there yet. Um, a guaranteed rate, we actually go down to a 560 credit score. So even if you're in the lower end of the credit scores, we can still help you out. And we actually provide a path to better credit score. So I will look at your credit and tell you exactly what you can do to better your credit score.
Awesome. Could you give me one hint or one tip to improving my credit fairly quickly?
Okay, something that costs somebody no money and works really, really efficiently. If you have somebody in your life that can help you out, they can add you to one of their credit cards as an authorized user. It doesn't harm you or them, and you want it to be a credit card that has a high limit and a low balance. And you'll get all of the available credit from that credit card and that person's good payment history. And again, it costs you nothing and it doesn't harm the other person. When they get the card in the mail, they can just throw it in the trash.
That's awesome. All right. Let's talk money. So, I think everybody knows that when buying a home that you need some of a down payment towards the home. But what other costs would I need to be aware of when buying a home?
Ben, that's a great question. I think a lot of people overlook closing costs, but it is definitely something that you have to account for. Um, Closing costs tend to be about 2% of the loan amount added to what you need, from on top of the down payment. There's going to be, a fee for the appraisal, um, home inspection. There's an attorney involved. There are prepaid, so taxes, insurance, all of those things. What I would say to anybody buying a house is that you just want to make sure that your lender shows you what you will need to have in order for your loan to be approved. So think down payment plus closing costs and prepaids. Um, because a lot of people just are thinking about their down payment, maybe 3%, but there is that little bit additional. And when you're looking for a home, you just want to strategize with your lender and your realtor to make sure you have everything that you need.
Sure. Can closing costs come as a gift from, let's say, a parent?
Yes, I
Awesome.
love that.
Yeah,
They
great.
can.
Hey, Jen, I want to ask you, what are types of things I should avoid once I get pre-approved?
Okay. So, once you're pre-approved, you're not in the clear yet. You want to make sure that you keep things the same, which means keep your job, keep working the same hours that you've been working, don't decrease your income, and do not apply for any new debt. Do not apply for new credit cards, new car loans, personal loans. If you absolutely need to, you want to make sure that you ask your loan officer if it will impact your pre approval.
And most likely it will because it'll affect your debt to income ratio.
Absolutely, yes.
Yes. Okay.